On Friday, the Canadian dollar traded at its best level since October. However, the US dollar has been broadly weak. We should remember that. And in fact, Bloomberg says that the Canadian dollar has been the worst performing G10 currency year to date. Against the greenback, it is up, or as of today, was up 4.8%. However, the Swedish krona is up more than 16%, and the Swiss franc has jumped more than 10%. Our guest, so we can see the loonie there, not far short of 73 cents. Our guest has been an outlying bull on the Canadian currency. He's still making the case for the Canadian dollar to get to 74 cents by the end of this year. We're joined by Adam Button, Chief Currency Analyst at Forexlive. Great to have you in the studio as well, Adam.
Thanks for having me.
Thanks for coming in. So you have been, you say, more bullish on the Canadian dollar?
Yeah, last year we were really worried about the Canadian dollar, but this year as things really started to fall apart for the Canadian dollar, you started to look out. We were worried about the election. We were worried about the U.S. trade war. We're worried about China. And then China started to stimulate. The U.S. is spending a lot right now, and the trade war is at least at an ebb. We have some forward momentum in politics in Canada. The housing market has held up so far, and most importantly, the Canadian consumer has really hung in there. If we saw last week's retail sales data, it was strong. Canadian Tire talking about a strong consumer. Everything has really held together for Canada. So we sort of looked into the abyss there when we were at the lows for the Canadian dollar, and it really couldn't get any worse. And now, like you said, we're seeing some weakness in the U.S. dollar, and that's kind of reflected back in the Canadian dollar. But things are holding up in the Canadian economy right now.
And we got that speech by Tim Hodgson, the new energy minister, and you say that was noticed abroad. Tell us why.
I think the market is really giving Mark Carney the benefit of the doubt and his government. And you had what everyone wants to see in Canada, Canadians included, is building things in Canada, doing it on budget, doing it at a reasonable time frame. And you have a very serious person in Tim Hodgson, who's worked around the world in very important roles, saying, listen, we need to build energy in this country. And I think he's able to sort of bring that consensus. And again, this is the benefit of the doubt moment right now for Canada. We do want to see those shovels in the ground, but right now there is this huge opportunity in Canada, and that's something that he emphasized in energy right now. And even President Trump last week was talking about massive investments in the U.S. grid and U.S. energy. So the whole world has realized that we need all these types of energy, and Canada has it. Yes, it's easy to promise, but it's going to have to be delivered. And if not, then next year will be another rough year for the Canadian dollar.
So you see 74 cents by year end still?
Yeah, there's some real momentum here right now in the Canadian dollar. And really, a lot of this is, again, selling of the U.S. dollar. The market doesn't like a lot of what it hears in terms of U.S. economic policy right now. So we see, a lot of the correlations are really breaking down with the U.S. dollar, where we would have seen these sort of risk on, risk off sort of thing we've talked about for 15 years. It's not unfolding like that anymore in the U.S. dollar. There's a little bit of a loss of confidence in the U.S. dollar, which was a very, very crowded trade for the last number of years. And it's really coming undone at the moment as U.S. just goes against the economic orthodoxy. The foreign exchange market has seen countries all over the world try to rewrite the rules of economics, and the U.S. is trying that now. And, there's a lot of doubt that it's going to work.
I'm thinking about Argentina, which infamously for decades tried to have a policy of self-independence, autarky, rejecting imports, but it didn't work.
The history of Argentina is unbelievable. They've tried everything, and none of it worked. So they're trying something new now. There's actually some cracks in that story right now as well. But yeah, we know what works, right? Open markets, free markets, trade. Letting everyone do what they do well. And, this deregulation agenda that Canada is edging into right now can work. And it can work in America, too. But, this trade needs to sort itself out. Again, it's so chaotic. On Friday, we had Trump talking about 50% tariffs on Europe. And then on the weekend, he takes them off. And so you're
delays them anyway. Yeah,
exactly.
Yeah.
So, the market obviously hates that. And, we're cheering it on today. But you can't, I worry that there's going to be a CapEx cliff in Canada, the United States, where companies are delaying investments, looking for clarity, and eventually these investments just don't get made, and then we start to see the layoffs and the consumer spending falling. We can't live in this environment of intense uncertainty indefinitely.
You think, you suspect, and I guess sometimes these things are only clearly perceived in retrospect, but you think there's a fundamental shift perhaps happening in the market, the foreign exchange market, when it comes to the US dollar, and maybe a few times in a lifetime type event?
Exactly. That's not something we float lightly, and it's something where, it's happening right now, and you see it on a day-to-day basis where the drivers of the U.S. dollar are inverting a lot. So we see rising U.S. Treasury yields, borrowing costs. Normally that boosts a currency, but we're seeing the U.S. dollar fall at the same time. So a lot of these correlations are breaking down, and that starts to look like a regime change in the foreign exchange market. And you can see why it might happen. For instance, the U.S. is running massive deficits right now, and something like no tax on tips. I mean, it's a ludicrous policy that is obviously going to be exploited. And then you have Congress running these massive deficits. Eventually, they're going to have to come to reverse. So the market might be looking out 3-4 years and sensing some of this pain or inflation. And it's just really somewhat of a loss of confidence in the U.S. dollar. And you can see it in gold. You can see this dispersion into other currencies as well. Whereas Canada kind of stands out with somebody at the helm who's obviously deep in economics. Again, benefit of the doubt right now, and we're all hopeful that it's going to work out. But for the U.S. right now, it's tough to be overly optimistic.
One bullish turn, though, for the US dollar could be Congress, the Republicans growing a spine and actually taking more command of trade policy.
Yeah, that's right. Well, I think that is when you would want to buy the US dollar. We're going to have this deficit discussion right now in the US, but beyond that, Congress has the power over tariffs. It's right in the Constitution. It's Article 1 of the Constitution. And there are a lot of congressmen and women who don't want anything to do with a trade war, do not believe this will work. And there's a sense that they're letting Trump play this little game until about the autumn. Then they're going to get their big tax cut, and then that's enough of that. And Congress will say, okay, we're not going to renegotiate USMCA. We're not going to put massive tariffs around the world. Yes, maybe we'll try to isolate China, but with our allies. And I think if we were to get there, then you would have a lot of reasons to be optimistic, not just the U.S., but around the world and in Canada. That's the best case scenario later in the year.
Bloomberg calculates that the US dollar is now close to its lowest level since July of 2023.
It's really fallen under the radar. I think if you go, we've been through this equity cycle, right? We had a bit of an optimism at the start of Trump's term, big dip, come back. A lot of these assets have dipped and then come back. The U.S. dollar is still way down from where it was, and there's a real signal within that, and it's persistent. It's happening again today. It's worsening at the moment, even as some of the U.S. economic numbers look okay.
Maybe you could put up a 10-year chart for the U.S. dollar. So apart from Congress reasserting control over trade policy, what else could... there's a 10-year chart, so we can see we are near a 2-year low now for the U.S. currency. What else could boost the greenback, do you think?
Yeah, I mean, you never underestimate the spending power of the U.S. consumer, right? You would like to see, the American consumer step up. There is still some optimism. If we get this deregulation agenda starting to happen in the U.S., and we, again, just making peace on trade, getting a little bit more predictability. We had Trump in the Middle East a couple weeks ago, and it was just this quiet week. Everything rose, everything worked. So you're just hoping for a little bit of silence. He's coming to Canada in a few weeks. Our belief is that when he travels, he doesn't like to pick fights. So maybe by this mid-June period, when he's traveling again to Canada, things will die down again on the trade front, and we can get some steps forward in terms of cooperation with Canada and the world.
But your bottom line is Canadian dollar likely to get to 74 cents by the end of the year.
Absolutely. And I think if the U.S., you have this July 9th now, all these deadlines running around there, and the Liberation Day tariffs coming back on. And I don't think you can really buy the U.S. until you get past that. So you see the Canadian dollar drift up through then and hopefully to the end of the year.
Thank you very much, Adam. It's great hearing from you. Adam Button, Chief Currency Analyst at Forexlive.